We're assessing the picture for international and emerging markets investments with Nick Robinson, Deputy Head of Global Emerging Market Equities for Aberdeen. This is The Navigator. Welcome to The Navigator, where we talk about all-weather active investing and plotting a course to financial success with the help of closed-end funds. The Navigator is brought to you by the Active Investment Company Alliance, which is a unique industry organization in that it represents the entire spectrum of the closed-end fund business, from fund sponsors and creators down to users and investors. If you're looking for excellence beyond indexing, the Navigator will point you in the right direction. And today, our directions, well, they're going everywhere around the world with Nick Robinson. He's Deputy Head of Global Emerging Market Equities for Aberdeen, which you can learn about at aberdeeninvestments.com. And while you're there, you might want to look for Nick's podcast for Aberdeen. It's called the Emerging Markets Equities Podcast, and it'll give you even more details on what Nick and the team are thinking about investment opportunities around the world. If you want to learn more generally about closed-end funds, interval funds, and business development companies, then you might want to go to aicalliance.org. That's the website for the Active Investment Company Alliance. Nick Robinson, thanks for joining me on The Navigator.
You're welcome, Chuck. Thanks for inviting me on. It's a pleasure to be here today.
Let's talk about where in the world you're seeing the best opportunities, because there's plenty of tension. There's a lot of ancillary stories, and we've got a dollar that has been weaker that has made international investments more attractive. But that doesn't mean that all places around the world are created equal. So what's your take on what is looking good and what's not right now?
Yeah, it's a good place to start with emerging markets, given we have many, many countries all around the world in very different regions of the world. You know, it's an interesting time to be an emerging market investor. One of the things that's really become apparent over the last couple of years is just how much of emerging markets these days is tied to a lot of the kind of AI supply chain boom that's been going on. So obviously you've got all the big names in the US that dominate AI, like NVIDIA and Microsoft and OpenAI and all those guys. But yeah, one thing that's become apparent is just how many emerging market companies are connected to that and are in the value chain. So, and that doesn't just kind of lead to the more obvious places in emerging markets like Taiwan Semiconductor, which makes all the chips for NVIDIA, but it's also the Korean companies that make memory chips for the kind of AI processing systems. But then it kind of spreads down even further to companies that make electrical grid infrastructure systems, which are pretty big in South Korea, and even uranium miners as well, for the potential resurgence in nuclear power that we're seeing. So, I would say there's an awful lot of companies in emerging markets that are tied to that, which are doing very well off the back of this CapEx boom that's being driven by AI at the moment. So that's one area we've been looking in. And I think particularly last year, we started to look a little bit broader outside of the kind of picks and shovels AI companies. And that's, or at least identified a few other opportunities there.
Are the opportunities in AI internationally more about the companies that are currently selling the AI stuff, or is it about what's happening next? And beyond picks and shovels, everyone's saying AI is going to create this massive productivity boom, but we haven't seen it yet. What we have seen is massive amounts of investing to hopefully get that. Do we wind up seeing that investment really buoy international companies here, or is there something coming where we have to prove the concept before we can get the next leg of the boom?
That's a really interesting question. I think for global markets, it's very easy to point to the US and say, monetization is occurring now in the US. Whether or not there'll be enough monetization to justify the capex, who knows? We're in early days so far, but I'm sure some companies will manage to do that. I think in emerging markets, it's a little bit less clear, right? So yes, there's a lot of companies that are benefiting from the huge capex, and that's now panning not just tech, but also some of the industrials and materials sectors. But are there companies that are now using AI to monetize? And I would say, if you look broadly around emerging markets, that there are, but I would say it's fairly focused now in China. So China has really developed some very strong kind of AI systems. We saw that, really at the beginning of last year when we had that kind of DeepSeek moment, which made the whole tech market wobble for a quarter or so, when it just became apparent that China had really developed a lot of very powerful AI tools using less powerful hardware equipment. So I think, we are seeing that in China. The Chinese market is more balanced towards new economy type companies. So the likes of Alibaba and Tencent are beginning to show monetization. I think outside of China, it's just a bit less clear at the moment. Sure, there's some companies, particularly some of the new economy companies in various bits of the world that are doing some interesting things with AI, but I would say the monetization bit isn't as clear yet.
Aberdeen has closed-end funds that look at the bulk of markets, but also has a lot of funds that specialize in various areas. You've got emerging markets, excluding China, for example. Given so much of the focus has been on AI, and then so much of that focus has been on China, where else in the world are you finding the AI story, or is the investment story in the rest of emerging markets one that is not AI and is maybe more driven by weak dollar?
When you look outside of China, Korea, Taiwan, which are the big AI markets in a way, it's a mixed picture. So, you look at Latin America and, a big chunk of that market's driven by copper, particularly Chile, Mexico, very tied to the copper price. Down in South Africa, you've got real benefit from the gold price, which has gone parabolic this year, as you well know. There are an awful lot of opportunities outside of the kind of AI type themes, but the markets tend to be quite idiosyncratic in terms of how they behave. So you get the kind of commodity linked markets, you get the markets, particularly in East Europe, for instance, which are being quite tied to kind of German reflation and that kind of defense spending that's now going on as a result of less confidence in NATO. So there's all sorts of kind of little drivers that are going on at the moment around the world. And I think different regions of emerging markets tend to be linked to different parts of those themes at the moment.
There are a lot of global tensions. Let's start with the tariff picture because that affects more countries. But how, if at all, has the tariff picture actually impacted investing in emerging markets?
Yeah, I mean, it's had some pretty interesting impacts. One thing that's become quite clear is just how asymmetric tariffs have been, promoting the manufacturing of some countries versus others. And there, a good example is, say, Korea. So you've seen this kind of real resurgence in the Korean stock market in the last year, not just driven by chips, but also driven by Korean industrials companies and the shipbuilders and defense companies in particular. So, as the US kind of has asymmetric regulation on Chinese vessels, and Chinese vessels are tariffed aggressively and charged more for docking in US ports, you've seen much more demand for Korean-built vessels. So, that's kind of linking into this shipbuilding cycle that's going on at the moment. So tariffs can impact that way. And you've also seen tariffs, and the threat of tariffs have quite big impacts on some emerging market currencies. So, India in particular stood out kind of in the back half of last year as being quite aggressively threatened with tariffs. And you saw quite a big weakness in the Indian rupee on the back of that. Is certainly a risk for emerging markets. I suppose even Brazil had an interesting case, didn't it, where aggressively tariffed on for political reasons rather than economic reasons when former President Jair Bolsonaro was investigated for his various corruption activities. And President Trump didn't appreciate that. So here the country with a big tariff, which has now mostly been reversed. But yeah, it's another kind of tool, and I suppose a sign of how this former kind of rules-based global order is starting to break down a bit.
Obviously, everything we saw in Venezuela was order breaking down and potentially trying to create a new order. Venezuela is not an emerging market. It's considered a frontier market. But how do those tensions play out? And for you, do they not wind up having much impact? Because while oil, of course, central to the Venezuelan economy, not necessarily central to your investment outlook.
Yeah, I mean, it's a big question. I think you are seeing more conflicts around the world at the moment. We've had, the Russia-Ukraine kind of the kind of Middle East, kind of Israel conflict. We had India, Pakistan bubble up as well a bit last year. And I think, one of the impacts that that's had is, I suppose, concerns. There are concerns that this kind of global order is breaking down to some extent, and I think that has implications for the dollar. But even things like in 2022, when Russia invaded Ukraine and there was, I guess, kind of freezing of Russian central or US dollar denominated central bank assets, you've seen quite a big demand in like central banks buying gold now rather than dollars, and seeing that mix shift. And I think that that's continuing. And now, with, I suppose, more concerns about tariffs and countries wanting to be more self-sufficient, again, that points to a weaker dollar, stronger gold price. And, with a breakdown potentially of the NATO agreement, again, that points to more kind of self-reliance and a move away from kind of the US to some extent. So, yeah, I mean, it is a concern global. It does mean that kind of risk premium should head up. But, generally speaking, a weaker dollar is good for emerging markets, kind of seeing that play out at the moment. So for emerging markets as an asset class, it should hopefully still be okay.
The other side of that, obviously, there are times when you make your money based on earnings, or there's times when you make your money based on what's happening and how currencies are changing. And then there's times that you make it based on valuations. Obviously, things like AI, those valuations are based a lot more on potential than they are about what's happening broadly on the market. But for you, where are the best valuations in the world in terms of what you're looking at?
Because there's been such a big divergence in market and sector performance in the last year or two, I think there are pockets of very attractive valuations open up. One thing that's worth looking at is the commodity sector. You've had very strong rally in companies that are linked to the copper price, the gold price, which means that those companies that are doing less exciting commodities like iron ore are very cheap and generating huge amounts of cash flow. Also, there's some very unloved parts of the market in the financial sector as well. Banks in Korea, fintech companies in places like Kazakhstan, which are generating huge amounts of cash and trading on very cheap valuations. So I think, one of the nice things, I suppose, about emerging markets and about these types of big trends that you see where one sector gets favored over another is that does leave more opportunities around for those that don't mind buying something that isn't quite as exciting perhaps, but is generating lots of cash, which as bottom-up investors, we find it quite exciting at least.
Always exciting to find opportunities wherever they are around the world. Nick, thanks so much for joining me on The Navigator to talk about them. I hope we get a chance to do it again sometime.
Thanks, Chuck. Thanks for the questions. They were great and really enjoyed it.
The Navigator is a joint production of the Active Investment Company Alliance and Money Life with Chuck Jaffe. And I am Chuck Jaffe. It'd be great if you check out my show on your favorite podcast app, or you can go to moneylifeshow.com. Now, to learn more about interval funds, closed-end funds, and business development companies, go to aicalliance.org. It's the website for the Active Investment Company Alliance. Thanks to my guest, Nick Robinson. He's Deputy Head of Global Emerging Markets for Aberdeen. And you can go to aberdeeninvestments.com to learn about their closed-end funds, but also to check out their Emerging Markets Equities podcast, which Nick hosts. The Navigator podcast has something new for you every Friday. Make sure you never miss an episode by subscribing or following along on your favorite podcast app. And if you like this podcast, leave us a review and tell your friends about it, because that stuff really does help. We'll be back with more closed-end fund fun next week. Until then, happy investing, everybody.